Hi, everyone. Welcome back to another Calling All Investors Live with Caeli Ridge. Today is Tuesday, Valentine's Day, which is why Caeli's wearing red. Look how festive she is. We meet every Tuesday here at 4:30 p.m. Eastern, 1:30 p.m. Pacific to talk about all things real estate investing, those kinds of things. And today is no different. If you're joining us live here on the Zoom call, please make sure you take advantage of the Zoom tools to either raise your hand or use the chat, or you even use the Q&A. Thank you very much for everybody who's dedicated your time to come. We really appreciate it. Today is going to be all about preparing for a spring market. Now, there's a lot of talk about spring market. We got some CPI numbers out today. And Caeli, welcome, and tell us, what do you think about the spring market?
I continue to be really bullish on real estate, guys, and I think that the spring market is really going to be telltale signs of what we have coming for us in the future. There's no secret. I mean, I guess depending on the publications that you're listening to and you follow, chances are you're hearing that the buyer's market is going to continue to expand. I think that my personal opinion is that values in, I would say, the average market. I have to say this because people will just inadvertently come back and say, well, not in this market. There's exceptions to every rule. I understand that. But I think on average, most markets are going to continue to see drops in housing prices. So that means for us investors, if you are ready, you should be, and we're going to talk about that, you're going to find yourself, especially coming into spring, in a really good place to take advantage of reduced home prices and the ability to negotiate those home prices and seller paid closing costs and all the things that we've been talking about for the last, 6-ish months. Interest rates, I think, also will continue to start faring a little bit better. We've been kind of on a roller coaster ride the last couple of months, but we can talk more specifics as we get into this. But I think that for the spring here coming up right now, it's here. We all have some unique opportunities as investors that don't come around every day, that we should be taking advantage of. And if you're not ready, we need to get you ready. And that's what today should be for.
Awesome. I love how you frame that. So if anybody saw the emails that went out earlier today or saw the post in the community, there were a bunch of questions that we asked. We're going to do a first, Caeli. I'm going to poll the group here. We've got about 20 odd people that are in it. And the first thing I want to talk about is pre-approval letters. So I'm going to go ahead and launch a poll. So on your screens, you should have the opportunity for the poll. And the question is, who has ever used a pre-approval letter? So we'll let this go out and get a fair number of folks. Thanks very much for everybody being collaborative here and talking. So we'll keep this open for another 3 seconds, and 3 and 2. Final answers, 1. Okay, we're going to end the poll. And so I'm going to share the results. And so Caeli, without looking at the screen, if you already have, so don't look. So okay. Over under, 3/4 of the people have used a pre-approval letter. You think that's too high, or you think that's too low?
It's probably too low.
Okay.
I mean, I believe it should be higher, but are you saying that that's what it said? Maybe I want to make sure.
So you answered good. You answered good. So the respondents, out of 18 folks, 13 people said yes, they had used a pre-approval letter, which means 5 did not use a pre-approval letter ever. So when do you really need to use a pre-approval letter? What's your opinion on that?
Well, I think that more often than not, I think those of you that have used it, you'll know that you probably can't even view inventory until you have a pre-approval letter, right? Most turnkeys or sellers or agents, they're not even going to want to deal with you until they know you are viable to have financing. Unless you're paying cash for properties, more often than not, you're not even going to get to see what they have available for acquisition until you have that pre-approval letter. But also, it's going to add some credibility, even if that wasn't the case. Let's say that you're dealing with just an off seller, you're going it alone, you're not using a turnkey, you're doing this all by your own, your own devices. Having a pre-approval letter, if there's multiple offers on the table and you're one that has a pre-approval letter of 2 or 3 that don't, they're going to be looking at you as a more viable option to accept the offer, even if you're a few $1,000s under what the others might be. So the pre-approval letter carries some weight with it that can be to your advantage. So aside from all of that, I think that the pre-approval letter for your own peace of mind is very, very important. Making sure that, when you're sending in offers, If you have an accepted offer, you want to make sure that the contingencies in that offer are in place. Maybe we can get into that a little bit, but as it relates to the financing, with or without a pre-approval, you should have one. Make sure that there's always something within the language of your contract, your purchase contract, that says that there is a financing contingency, that any earnest money that you are providing is subject to hitting those contingencies, whether it be.
And what's, and so, because these words get thrown around a lot, so borrowers are sometimes really confused. The difference between a pre-qual and a pre-approval, and what does Ridge Lending do about pre-approvals? How does Ridge handle those?
So pre-approval, we really want to have the documentation, right? Pre-approval. Now, it hasn't gone through underwriting yet. We don't have the conditional approval from an underwriter. Something called AUS may or may not have been run yet. I'm not going to bore you with that rhetoric. A pre-qual is back of the napkin stuff. Maybe we got on the phone and we talked, which is perfectly fine. But a lot of times agents are the only ones that are really going to know the difference between the two. But a pre-qual is where we've talked and we've done a Q&A. What is your income, right? I know what questions to ask and draw out, that I can connect those dots and say, okay, based on this, here's a pre-qual letter. Pre-approval is you've actually gone through the process of getting an application in, your vials of blood are on file, all of that has been reviewed and we're ready to rock. The only thing missing is that we have not actually submitted to underwriting. Maybe we don't have a property identified yet, right? It's just still a TBD, but the pre-approval is, I guess, more official between the two.
I gotcha. All right, that makes sense. And again, for those that are just joining, today's Valentine's Day. Caeli's wearing red and on your honor, and we're taking questions, getting ready for the spring market. As Caeli was saying, if you did need to pre-approve, Caeli, I think this is still the best way to do it is to give Ridge Lending a call, right, at 855-74-RIDGE, or you can email, you can even start the conversation with info@ridgelendinggroup.com, or you can even just apply online. It takes like what, just 5 minutes or so. Apply
Pretty
on the
quick.
website and get some good answers.
Yeah. And, just to follow up on that, Larry, even more importantly, I think that's where I was going and I sidetracked myself. So the pre-approval letter is great for, commanding a little extra respect. Maybe they have to have one before you can look at the inventory. But what it's really going to do, the pre-approval, right, the more in-depth review, is it's going to prepare you. What if there's something about your credit or your assets or your qualifications? You guys aren't experts in guidelines, right? If you were, I wouldn't have a job. So if you didn't know, to be prepared that, oh, whoops, you didn't have this asset long enough, we can't use it for your down payment, or, oh my gosh, your credit score is 1 point under the minimum to get you a loan for this particular product. Let's look at how we can, bolster that score. What can we do organically to get you over that benchmark? The pre-approval letter can do more than just satisfy a seller or a turnkey. It's really meant, I think, more than anything, is for us to have some of those one-on-one conversations that digs into what your goals are, so that we can inform you, we can advise you about how it looks. You look great, or, oh, we need to work on this if this is what you want to do in 6 months or 12 months. Right? That roadmap that you guys are always hearing me talk about really starts with that pre-approval. So I can't stress enough how important it is. Any of you that don't have a current application on file, you probably should. Now, that's going to kind of segue into the next thing. I'll let you go ahead and talk about that, Larry. I'm taking your thunder.
Did you read my notes?
I did.
So, again, every lender tends to do this a little bit differently, but when you have a pre-approval or a pre-qual, at some point, the lender's looking to run your credit report, I have to imagine. So when should you actually let your lender run your credit report?
So first of all, let's talk about credit really quickly and dispel a few bad tidbits of information that a lot of people come to us with. A credit report, we're going to kind of focus conventionally. A credit report is good or valid for 120 days before a new one is required. All right, so we have 4 months to use that credit report. So depending on what your goals are, or what you have in the hopper, or what might be coming up, that would be something that we want to consider. We can also, by the way, as a subset, we can do a soft credit pull. Okay, it doesn't have to be a hard credit pull. If we know that we really want to get that pre-approval thing going, but we're a little bit far out from when we think we're going to be closing on something, we can elect to do a soft pull. The other thing I want to mention about this as a strategy, And this one's pretty big. This is something that we, as your dedicated loan specialist, are going to be focused on for you. As long as our communication is good and we know what you're trying to do now and what might be coming down in the future for you, the credit score requirements change based on how many finance properties you have. It's not always going to be the same. The more finance properties you have, the higher minimum credit score obligation you're going to need to qualify. As a result of that, and knowing what our timeline, our window is to keep one credit report valid before a next one is necessary, I said 120 days, right? So 4 months. However, there's little tricks in there, optimization things, and this is part of that pre-approval that we're going to be educating you with. There's something called rapid acquisition, you guys. That means that if you have gone out and purchased multiple properties in a small window of time, credit scores, even high credit scores, 800 credit scores, can take dips below the minimum required to qualify. We're going to be looking at those kinds of things with you, right? If you're somebody that's doing multiple transactions, you're buying 2 properties now, and maybe you've got 2 refinances later or whatever it may be, and you're over a specific threshold of the number of finance properties where your credit score has to maintain a higher level, I'm going to look at that and say, okay, I see Doc Wex here. My buddy Steve is on the call, so I'm going to use you, Steve. So Steve has a 780 credit score right now, but there is a potential, because he's doing so much in this small window of time, that his credit score is going to drop below where it needs to be to continue to do the remaining transactions that he wants. Okay. In that case, my credit report is 92 days old. Okay. I still have about 30 days left before I technically need to pull another credit report for him. But I think what I'm going to do before any rapid acquisition hurts his score and precludes him from qualifying for the next set, I'm going to pull another report right now, right? Before that debt hits, I've just bought us a new 120 days in which we can use with his credit score being optimized. I know that was maybe the long way around, but there's a lot of strategy involved in this. And I think my point is, you guys, just going back to the beginning, getting pre-approved is important for lots and lots of reasons. Strategy, I think, most important, so that we're optimizing what your buying power can be and your qualifications long term.
Caeli, awesome as ever. And those credit scores were hypothetical, of course. Those weren't actually credit scores. All right, so we have a couple of questions. And thank you very much, Caeli and Cher, for putting those questions in. Anybody else has any questions, put them in the chat or put them in the Q&A, or simply raise your hand if you want to be pulled off mute, and we'll hook you up. So Katie is always awesome with the questions. Here's one for you, Caeli. Does Ridge Lending Group's pre-approval process come with a conversion after? And then what's the nature of that? I'm sorry, conversation. I need better glasses. Does your pre-approval process come with a conversation after? What's the nature of the conversation, especially if you don't have a property lined up yet? Like what's into that, Caeli?
Yeah. It's not an automatic. We hope that you take advantage of those post pre-approval conversations where we can really dig into that higher level strategy stuff I was talking about. So the answer is yes, but you're going to have to come to us and say, hey, I just finished the pre-approval. I want to get on with Caeli. I want to talk to my DLS and dig through what the findings are. Unless you've signed up for our certified power buyer, which is a free service, at least for now, that we give to our clients. I can go into that in a second. Let me finish answering your question. So Katie, let's just say yes. After the pre-approval, we're going to get back together and have some higher level discussions, conversations. The content or the nature of that conversation is really going to be about what your goals are. What is it that you're trying to do today? Let's say short term is 12 months, long term might be 5 or 10 years down the road. Understanding what that is, coupled with what your qualifications are, we'll come up with a scenario or an outline that says, this is what you can do today, or this is what you need to do to get to do what you want to do today. And then these are some of the steps that we want to make sure that we're taking along the way, so that in a year or 2 or 3, you're maintaining those level of qualifications necessary to keep going, if that makes sense. The second part was, what was it, Larry? LLC, what?
The second question was, what if you don't have your LLC prepared yet, but you intend to use an LLC? Would that affect your pre-approval process?
No, absolutely not. No, I'm going to leave it there. It might be a more in-depth answer, Katie, but we can talk about that more one-on-one. But no, that won't have anything to do. And I think I missed the part of your question too that asked, what if you don't have a property yet? That's perfectly okay. as a TBD, if you're coming in as a TBD, obviously, if you have a property and a contract in hand, turn times and things, you're going to have a priority setting within how long it takes to get all of that done, then get back on the phone with me or your dedicated loan specialist, of course. But no, a TBD is perfectly fine. What we'll probably do when we're doing the pre-approval is we're going to baseline an average, right? You've maybe told us what your active price point range is, right? You're looking at properties between 100 and 200,000. So we'll probably use 150,000 in that case. And more often than not, we're going to use a state like Texas or Pennsylvania or maybe Florida, because those states are going to have the higher property taxes or potentially higher closing costs, because Florida has a state stamp tax associated with a closing, just to kind of come up with a baseline that's the most conservative possible is what we'll do if you don't have a property identified yet.
Awesome. Guys, keep the questions coming. I am gonna move us forward in the agenda and the prepared stuff, and I do want to pepper in the questions. If for some reason we don't get to your question, I'm going to make sure we get back to your question on the community or contact you directly if that's okay, whatever you'd like. So, Caeli, this has come up quite a bit. I know that I've seen stories recently where somebody gets their credit report run and then they're slammed with all of these unsolicited phone calls, and it's a major annoyance. And it's also kind of scary because you feel like, well, what happened to my information?
Did they sell it? Did they?
Yeah, did they sell it? Did they do something? So, why add your phone number to the do not call registry? Like what is it? And there's an actual poll, and I totally screwed this one up, so shame on me, but I actually did a poll. So
Okay.
I'm going to launch this poll, and the question is your phone on the DNC registry? And of course, your choices are yes, no, or what is the DNC registry? So these polls are kind of cool. We should do more polls.
Yeah, we should do. I like these.
These
Yeah,
are cool, right?
I like.
So we've got about 38 people. So we'll give it here another 5 seconds.
Okay.
5, 4, 3, 2, 1. Okay. So the results are in, and thanks to folks to participating. So a huge number are either no, or they don't even know what the DNC registry is. You want to help the group out?
Well, so do not call list, right? So when someone pulls your credit, if you guys have gone out to get a mortgage or really kind of any credit inquiry that comes up, you are going to be flooded with phone calls and text messages and emails if they've got a connection to that, to the point that you want to just blow your brains out. It can be very, very annoying. You want to first and foremost. So what we would have our dedicated loan specialists do is we would instruct you to go ahead and get to and Larry, if you have the logistics of it, the specifics, please, you can interject, but we're going to have you add yourselves to the do not call list. But we're also on our end, we're going to omit certain pieces of your information when we actually run the credit. What is it, Larry? Is it phone number and address? There's 2 pieces that we omit.
So actually, yeah. So on the credit report, sometimes the information that will come up, and vendors will match up your phone number with your email. And so if they see an inquiry from a mortgage company, they'll create the trigger lead. For those that are watching the Q&A as well as the chat, I just put a link in there for donotcall.gov. Guys, it takes like 5 seconds to register all your phone numbers. It's worth every penny. Yeah.
Unless you like getting the spam calls and I mean, should we do a poll for that, Larry?
Poll for that? Yeah.
Who enjoys the text messages and the
calls?
calls?
It's horrible. It's horrible.
Yeah.
Okay. So let's go back to a couple questions because LLCs come up quite a bit today. So these are all going to be lumped together if you want to answer them all at once.
Sure.
One was, does Ridge offer a debt service coverage ratio loan that can close in the LLC? Another one is, what's the least amount of down payment if you're using an LLC? And then finally on the LLC right here, we've got, if we allow the LLC to purchase it, will a new mortgage go on to the personal credit report for the person in that closing?
So question number 1 and number 3 are going to be tied together. So the first thing I want to share with you guys is that there is a very specific distinction when we talk about LLC as related to leverage. So there's going to be a difference between recourse and non-recourse. Most of you have heard me talk about this. Okay. There's a subset once I answer this question that we have to back in. So recourse means that you have signed a personal guarantee. Non-recourse means there is no personal guarantee. In both of those examples, recourse and non-recourse, both the loan and title close in the name of the LLC. Okay, that's a different animal loan. This is going to be a non-QM loan or kind of a commercial loan that will facilitate both the loan and title closing in the LLC. Now, the second piece to this is you can have a loan in your individual name, but close in the LLC name. Okay, that's going to be on a non-QM basis. You can do it that way. However, every time I have this conversation about LLC, I'm very keen to learn whether or not it's exclusively for asset protection. Is that the need for the LLC? And in which case, if you qualify and you have open loan spots available, you really want to take a Fannie Freddie loan, which means you're going to close the loan and title in your individual name. Okay, both of them have to close in your individual name, but you will quickly, right after closing, transfer title ownership into the LLC name for that asset protection, if that LLC need is exclusively for asset protection. If you're trying to do it for some other purpose, I would want to have a one-on-one conversation for you, not with you. 9.9 times out of 10, most people, when we talk about LLC, really are just looking at it for asset protection. And if you can get Fannie Freddie loans and asset protection, why wouldn't you do that? And let's not forget, the LLC, you guys, is anonymity. Really, that's all it is. It's a layer of secrecy or a lead veil that if you were ever to be sued, you know, if you've got a litigious tenant or whomever is coming after you for litigious reasons, they're not going to be able to find those assets because they're in an entity name. And really, this came up the other day. I should probably just mention it. If you're going to put your properties in an LLC and that's the way that you decide to go, make sure that the registered agent is somebody other than yourself, because that is public record. And if you have an LLC called, you know, ABC West Group or whatever it is, that's the name of the LLC, but I put my name as the registered agent within the Secretary of State establishment of the LLC, they're going to find my name. And then they're going to easily be able to identify those properties. So just make sure that you know that. Okay, so the first one was, can you get a loan?
Yeah, the first one was about down payment. What's the least amount of down payment for the LLC?
That was the middle one. So 20% is the minimum when we're talking about LLC. Okay, now Fannie Freddie lets us go to 85% LTV. So if within my language a minute ago, if you want to go Fannie Freddie, close in your individual name and then put the title in the LLC the day after, that's perfectly fine. You can have a little bit more leverage. I would comment though that currently, this isn't always the case, but current market environment says the points associated with an 85% investment property purchase are probably going to be such that it makes more sense to just put the 20% down, right? We'd have to look at it together and day by day it can change, so let me know. But otherwise, if it's straight LLC that you need, you're putting at least 20% down, sometimes 25% down.
Fair enough. And Katie, on your question about transfer tax, yeah, Caeli's talked about this in the past, that if you do have to transfer your deed from person to LLC, there might be additional charges. You should check with your legal counsel for where that property is located to get the best legal advice on that.
And make sure real quick, Katie, ask this question because it can make a difference. Sometimes if the transfer tax, if it's from an individual name into a single member LLC, they may be able to waive that transfer tax. So you do want to ask that question specifically and find out how much. Usually it's an amount per thousand in mortgage debt or mortgage amount is what they're going to calculate it on. And it can be very, very expensive in some counties. So definitely worth the ask.
Caeli, you know what time it is? It's time for another poll. It's time for another poll. We're going to do another poll.
Was there one question about credit report though? Do I want to answer that one really quick?
Credit report. No, there's not a question. There was just a question whether or not the mortgage will show up on the credit report if you use an LLC. I thought you answered that.
I don't think I did. The answer is that if the loan is in your individual name, but title is in the LLC name, it will absolutely fall in your credit report. Sometimes even if you've signed that personal guarantee, sometimes it will fall in your personal credit report. But whoever asked that question, I would want to have a discussion to find out why is that the question? Is there something else about that we need to talk about? And we can talk through the pros and cons of it.
So Chi, reach out, call 855-74-RIDGE, ask for Caeli or Carly, her assistant, and get on the calendar and have a discussion.
Hi, Chi. Talk to you soon. Go.
All right, so now is the time for a poll, Caeli?
Yes.
Okay, let's do this. Ready? All right, so the question we're asking is, when is the best time to buy a property? Your favorite question, Caeli. So go ahead and everybody, please go ahead and participate. We've got about 40 people on the call now. So when is the best time? Now you might be thinking, well, it's not, maybe it's longer than 6 months. If your answer is longer than 6 months, go ahead and just pick the 3 to 6 months, and we'll give this another 3 seconds. Got 1, 2, 3, and we're going to end the poll. Caeli, you've got some people that have been listening to you, I can tell.
Really?
Because out of 29 folks, we've got 62% that say now is the best time to buy a property instead of waiting. What do you think about that?
Well, I would love for those to participate and add in what their experiences and stories have been and why that I believe is true and relevant. So congratulations for those of you. I think that you're saying now is the time, because it always is now. But I think the piece that people, and I try to be careful about this question. It happens, I get this question 20 times a week. When is the best time to buy real estate? And I feel like, depending on who's asking, automatically they're going to be a little bit skeptical. Of course, she's going to say now or whatever. When the truth of the matter is, you guys, that's just not how we operate, first and foremost. My true, honest opinion as a fellow real estate investor is always now is the right time to buy real estate. Always, always, always. The question is it the right investment? Is it the right piece of real estate that we're purchasing? And that's obviously subjective to the place and time. So that might be a reasonable enough answer. If I were to add to that, you guys, if you're not doing the math, you're never going to know when the right time to invest in real estate is, whether the interest rates are higher or lower, or the values are up or down, or it's going to be a long-term rental or a short-term rental, or what kind of property management costs are you going to be paying? Is there appreciation of rents in the market that are reasonable? Have you done all your due diligence and gone back and looked at industry in the market that you're purchasing in? Do you have a nice pool of tenants, of renters that you're going to be able to pull from? What is the property manager's track record? What is their vacancy factor on average? I mean, all of these things need to be going into the question of when is it a good time to invest in this property? And you should be able to answer them if you're asking all of those questions, and probably quite a few more. But my answer remains consistent. Now, always is a good time to invest in real estate.
I don't know if anybody else appreciates that you just rattled off all of those questions just off the cuff.
I did. I'm good like that, I guess.
I guess you are. I guess you are. So listen, you led us into our final poll, and this is a doozy. For those that weren't paying attention to today's economic information, we got some pretty okay news, but the bond market is always fickle. So here's a last poll for the day. How much does interest rate matter? You've got a lot, you've got a little, or you've got not at all. And I think, Caeli, we've done probably, oh gosh, we've probably done at least 5 or 6 different episodes last year where we kept talking about rate, because what else were you going to talk about?
Right.
And we
Everybody
still
wants to
had
talk about
clients closing. Everybody wants to talk about rate. So we'll give this poll another 3 seconds. 3 and 2 and 1, and we're going to end it. And
let's see what they said.
It is a mixed bag. How do you feel about this? You've got half roughly say a lot, a little bit less than half say a little, and the clear minority says not at all. What do you think about that?
So I don't think not at all is the right answer. I think obviously interest rate plays a role. I think it's a lot less significant than most people will give it credit for. But my answer is similar to the last question. It's going to depend on the property. Okay. If this is a long-term rental in a market that's not going to have a lot of appreciation in rents, and interest rates are on the high end right now, I think that the interest rate matters a lot, right? If it's a single family residence, long-term rental, again, in a market that's not going to have much rental income appreciation, which should be a very modest 3% at a minimum every year, you should be appreciating your rents. That's my opinion. But if all of those criteria were the case for that investment property, I think interest rate's that's going to matter a lot more on that property than it would when we're talking about maybe a short-term rental in a market that's got very continual strong rent income appreciation, right? Then the interest rate's not going to matter as much. So it depends on the investment. But I would say to you guys that interest is so much less profound an impact on the investment than most people give it credit for. And if you're not doing the math, then you don't know what I'm talking about. So let me just kind of layer in some detail there. Let's say that we have $120,000 loan size. Okay, and I'm just going to illustrate a point for those of you that haven't already looked at this or done this math, but let's say we have $120,000 loan amount, and we're looking at an interest rate between 6% and maybe 6.5%, a full half a percentage point in interest rate. Most people I talk to don't realize that the actual payment difference, principal and interest payments between those two scenarios is maybe $25 a month. They're often shocked by that announcement. They're like, oh God, I didn't even realize, because in their head, they're hitting 6 versus 6.5%, and they haven't taken the time to do the math. Is it worth buying this investment property today for an extra $25 a month than it was 6 months ago? My answer almost always is going to be probably, yeah, I'm going to give up $25 a month to get this investment property that's going to give me some tax deduction, that's going to give me some home appreciation in the right market, right? Some interest or rent appreciation, all of those things. So it really is subjective to the individual investment and the place and time that you're looking at it. Do the math, it'll not lie to you, and you'll know exactly how important interest rate should be.
Love it, love it, love it. Yeah, I think everybody gets hooked up on the like, I want to win. I want to win the interest rate game, right? And I think
I get it.
normal.
Let me add something to that. Okay, it's funny that you say that, because this is the conversation that I have with clients all the time. An interest rate comes up in I would say 95% of the first kind of introduction calls that I have with people that are interested in our services, which is good. It's fine, of course, let's have the conversation. But if I try to share with them my own personal experiences, past experiences, I was ferocious about interest rates early on in my career when I was more actively acquiring, right? I was gaining as many properties as I could. Interest rate was obviously top of mind. I was new to the industry, et cetera. I was reading the ticker tapes, right? The stock, I was looking at everything, reading the publication. I was fixated. I was obsessed with interest rates. And this is before I really understood and did the math that I just described. More often than not, I was trying to play the market and hedge my bets and trying to lock on the absolute perfect place and time. More often than not, that activity was like Vegas odds. Okay, you probably know what I mean by that. I lost more than I won when I really tried to, and I was in the industry, right? So I had access that you guys don't have access to. But a lot of clients will, they'll have 5 or 6 different lenders that they're working with and shopping around, which I encourage. I'm not saying not to do that. I'm saying absolutely do that. But for an 1/8 of a point in rate or a 1/4 point or whatever, you just have to make sure that the value add that you're getting, if you're looking for the absolute lowest possible interest rate, and that's absolutely required for that particular investment property, that's fine. But more often than not, that's not usually the case, right? What are you getting? And I'll use us as an example, okay? What if we're an 1/8 of a point or a 1/4 point higher than our competitors? I believe, because we're never going to be the lowest, okay? I'm the first one to step up and say we will never be the absolute lowest. I will also say that we are very competitive in rate and cost, okay? But there's always somebody somewhere, somehow out there that's going to undercut me by an 1/8 or $500 or whatever it is, and I'm just not going to get into that. I would ask you then in turn, what value are you getting from Ridge? Are we worth an extra $10 a month? I'm going to say, of course we are. You guys can make that final decision. But interest rate, as it's important to this topic or this part of my explanation, you should be looking at that too. Is the lowest possible rate for $10 different a month or $50 or whatever it ends up being, is that the make or break for the deal? And if it is, got you. I understand, by all means. If not, then you're in good hands here, and we'll keep moving the needle forward, holistic relationship, and supporting your long-term goals.
We've got a last question. Given the time here, thanks everybody for all the questions so far. And again, if we've missed anything, we will circle back with you directly or on the community. So Stephanie wants to ask you a question, Caeli. Stephanie's considering buying their first quote seller financing close quote opportunity. As a buyer, what do you think of those terms?
Well, I need to know the terms, Stephanie, but I love the idea, especially if you're just getting into it. If you found the right property and you've done all of your other due diligence about this property, right? The property itself, inspection, the tenant market, property management if you're not going to be managing yourself, all of that stuff. I think that seller financing is a great opportunity if you find the right property, right? You're not having to deal with getting the loan and some of the brain damage that comes with qualifying in the loan process, right? It's not a perfect
15% down, 10% interest rate.
over a 30-year amortization. Stephanie, is there a balloon feature?
Yeah, that's what I was just
2
going to ask. Yeah, what's
Yeah.
what's the time on the note, Stephanie? How much time do you get to keep that 10%? 30-year straight note.
Interest, then I would say, no, I don't know about that. I would probably try to renegotiate that. Stephanie, 10% seems awfully high to me, but I don't know your circumstances. So guys, let's say that you're not qualifiable. Okay, you cannot get a loan. That's very, very unlikely, by the way, but you cannot get a loan, but you can get seller financing. 85% leverage is nice. I like that. And if 10% is the best you can do, amortized over 30 years, fine, go ahead and take it. If that's the only way that you can get yourself into this property, then you wait 6 months, 12 months, whatever. You're going to do a refinance, cash out, or rate and term refinance, whatever it ends up being, and you replace it with better terms, right? And maybe you harvest equity and go out and buy another piece of property. I think it's going to be really subjective to your individual qualifications and needs. But on the surface, 10% seems too high to me, and I would want to know why and potentially renegotiate that.
Fair enough. Yeah, just as Stephanie was saying that there was it's been a long time. I don't know if you've seen differently, but it's been a long time since I've seen seller held financing. And so I think that's a sign of how things are right now.
Yeah, I think that's a good point, Larry. So what he's saying, you guys, is that a buyer's market, right? You're going to have more opportunity, more leverage for seller financing. Feel free to check in with us. We'll give you our honest opinion. If you find a scenario where the seller's willing to hold that back, I would love to look at it with you. We'll peel it back and give you our best advice. Lair, I think I saw something pop up on my screen about the seasoning, the cash out seasoning. Do we want to touch on that real quick? Because I think there's a lot of confusion about the new Fannie Freddie rules.
Hey, it's your show. You want to talk about it?
Okay. Well, I had a conversation earlier today, and he was not aware that the rules for a cash out refinance, when you've paid cash for the property, right? Everybody, let me back up. Fannie Freddie both are now on the same page, and they say that for cash out refinance, based on certain criteria or characteristics of how you acquire the property and when you acquire the property, requires, instead of that 6-month window that we needed to season before we could do a cash out. Remember, cash out is key. Okay, that means cash in hand, different than a rate and term. People confuse that all the time. If they got a private money loan and all they care about is replacing that loan with a new loan at better terms, that is not a cash out refi. That's a rate and term refi. But Fannie Freddie came out, and it's now 12 months seasoning before you can do a cash out. However, the rules about the delayed cash out refi, if any of you remember that, where you paid cash, your source and season funds for the property, and you're only looking to take a maximum of what is listed on your final closing disclosure, cash in hand, using the metric of LTV maxes of the repaired or ARV or appraised value, there is no seasoning. That has not changed. If you use leverage to acquire the property, all right, somebody else's money, there's a lien on the property, and now you're trying to use an ARV after repair value to pull cash out in hand, you must wait 12 months. Okay, if there's any confusion, this gets a little bit complicated, I realize. If anybody's looking to do cash out and you're not clear on exactly what the rules are, please just email us, info@ridgelendinggroup.com. We'll find out what your particular circumstances are, and then we'll tell you what options you have. And maybe we've got other options outside Fannie Freddie. Maybe we look at the all-in-one. Maybe we look at a debt service or a non-QM that will have different rules. So don't pigeonhole yourself into just one outlet. There's probably more than one that we can be looking at.
Two final things. Caeli, do you want to put a plug in for the power buyer? Michelle asked about the super buyer, which I actually love that name, the super buyer. But I think
should change that maybe.
Maybe we should. Maybe we should.
We might have to give Michelle credit every time we do it then. That
Definitely.
Might be something. That's actually, I think, let's talk about that, Larry. Certified, let's do it now. Super power buyer. It was certified power buyer. Now it's super power buyer. So what this is, you guys, is once you've gone through the process of applying and submitting all your documents, and we have that baseline, we've reviewed them, we know what your qualifications are overall, That's when you get to talk to me one-on-one, much higher level discussions. These are a series of 3 or 4 calls. They last about 30 minutes in duration. We start by talking about your goals. I draw out further information that I need to know, but we really try to understand what it is you're trying to do through real estate, short and long term. And then we get into the education part where I'm going to provide you with, under the hood definitions. What are the underwriting guidelines as it applies to Fannie Freddie or non-QM or debt service coverage ratio, whatever it is that you're after? How do those guidelines apply to your qualifications today? Okay. And then I'm going to teach you how to optimize those qualifications, because as you evolve as a real estate investor, you're buying and you're selling and you're refinancing and you're 1031 exchanging, whatever it is, are your qualifications going to stay the same? Are they a straight line? Are they going to stay static? Of course not. Your debt to income ratio is going to be like this over time. Your credit score is going to change. It's going to vary. Your assets obviously are going to change. So all of those things being fluid, you need to understand what are the definitions to qualify, how do they apply to you, and then most importantly, we take the time to teach you how to optimize those qualifications. And this kind of goes into learning how to read a Schedule E from an underwriting perspective, right? The tricks about credit, we talked about a few of those earlier today. The asset requirements and the reserve requirements and how those change over time when you amass more properties or you offload properties. And then we take all of that and then we come up with a baseline and say, okay, this is your current buying power today. Does this meet the goals that you're trying to accomplish in 2 years? And if not, how do I teach you how to get there? What do you have to do between now and in 2 years in order to meet those goals? So it's pretty intensive. It's very subjective to the individual. But I think that my opinion is that this piece of education and learning is widely unavailable in this market. It's just not available out there. So I encourage all of you, any of you that haven't taken advantage, I think it's worth it. It's a little time consuming, but it doesn't cost you anything, at least now. So there you go. Super buyer power.
So I love it. And so there's 2 basic steps here. We'll end on this, Caeli. The first step is get over to ridgelendinggroup.com. At the very top, you'll see certified power buyer. Go ahead and click that. That's a questionnaire. It probably takes an average person about 10 or 15 minutes. So you have to have the questionnaire completed and you have to have your online application completed. Again, go to ridgelendinggroup.com, click on start here, get those 2 pieces together. You'll be assigned a dedicated lending specialist to make sure Caeli has everything she needs, and then we'll get the appointment for the certified power buyer super person appointment, whatever it is you want to call it. It's just getting to meet with Caeli, which is priceless. So again, for those that have asked any questions, I'll get back, we'll get back to you directly on the community. For anybody else that just caught on late into this, we will have the recording up. Last week's recording, we went through, Caeli went through the all-in-one simulator. It took a little bit longer for us to get to out because we had to cut it up into 3 separate pieces because that's easy to consume. This one should be up here in the next 24 hours. And that's all I have to say. Caeli, any final words before we let everybody go?
A happy Valentine's Day to everybody. Thanks for spending some time with us this afternoon. I love that our numbers continue to grow. This is great. Tell your friends, tell your family, anybody that you think would have value in joining us on Tuesdays at 1:30 or 4:30 Eastern. They are welcome. We'll see you next week, gang.